Very good morning. Welcome back again to the 16th session of current affairs sessions we are conducting. So in the last class we have discussed on macroeconomy aspects, GDP, GNP, inflation and some of the new concept that is in use. This class we are going to focus on fiscal policy and budgeting. Don't waste too much time, let's get started. So what is a major budget related funds in India? Very factual information. We have Consolidated Fund of India, Public Account of India and Contingency Fund of India. What is the characteristics of this? All these are constitutionally mentioned funds. Consolidated Fund of India means that is the operating account of India. All taxes that Indian government is collecting, all money Indian government is borrowing will go into Consolidated Fund of India. Then for whatever expenses government has, from there it will be redistributed. And for this redistribution, approval of the parliament is required. That is Consolidated Fund of India, Article 266 it is. Now the second one is Public Account of India. Same article, this inside article number will vary. This is for all the accounts, all the funds where government act as a banker. Like government is collecting fund for provident fund, small saving fund, postal deposits, all this will come under Public Account of India. Parliament permission is not necessary for expenditure on this. Executive can do the expenditure from this. Third fund is the Contingency Fund of India, Article 267. This is held by Finance Secretary on behalf of President. This is for unforeseen any expenses came, the fund will be utilized for this. Parliament approval is required but not for expenditure. Executive can spend this money. After that, approval may be taken from the Parliament. Go ahead. Let's discuss some of the stages, different stages in passing the budget. We have 6 different stages. Presentation of budget, that will be done by Finance Minister. On which date? 1st of February. Earlier it was done in last week of February. Why it was shifted here? If it is coming in the last week of February, for all the process to happen, then this next financial will be already starting. So to avoid this mismatch, we have shifted it to 1st of February from now on. Now there will be general discussion in the parliament on the budget. There will be scrutiny by different departmental committees, voting on demands for grants, cut motions and guillotine. What is guillotine? Like 20% of the budget will be by different sections. It will be taken for voting and different cut motions will be passed. Now rest of the budget it will be put all under one section and one single voting will be done. Such process we call it as guillotine. Now passing of appropriation bill will be there, and last stage is passing of finance bill. Finance bill is what the Finance Act give executive the power to take money from Consolidated Fund of India. Go ahead. What is budget receipts? Budget receipts generally we can classify into 2 sections, revenue receipts and capital receipts. Same concept, capital receipt means there will be creation of some assets, that is recovery of loans. If a loan is there, if some changes is happening in the principal, that will come under capital receipts. If the interest component will come under revenue receipts. Now disinvestment, borrowings, provident fund, all this will go under capital receipts of the budget. In revenue receipts, we have again 2 components, that is tax receipt and non-tax receipt. In tax also there is 2 components, direct taxes and indirect taxes. Indirect taxes best example is GST. Direct tax best example is income tax. So all other taxes also come into this direct tax category, like income tax, corporate tax, wealth tax, gift tax, all this. Now sales tax, custom duty, excise duty, service duty, all these are part of indirect taxes. All these are part of tax revenue of the under revenue receipts. Now non-tax revenue means it is interest receipts. If a loan is given by the bank that is getting receipts, it goes into this. Profit and dividends coming out of these PSUs and other government companies, fees and fines, external grants, special assessment tax or something like that, all this will come under non-tax revenue. Go ahead. Next we have direct versus indirect taxes. What is the major difference? Yes, incidence of tax means where it is collected. Impact of tax means who is ultimately paying this tax. Now for a direct tax you think in terms of income tax. Where it is collected? It is collected from the salary of XYZ person. So income tax assessee is the point of incidence. Now from whom this tax is collected? The same person. My salary is collected. My salary is the point of incidence, and from the money is also given by me. So both these are on same person. Incidence and impact will be on same person on direct tax. Indirect tax means if you are selling GST, who will give, in most cases, who will be filing the GST? The shopkeeper. So the incidence is shopkeeper or the seller, but the amount will be collected from the buyer, consumer. So the consumer will be impact of whatever the taxes. So this will not be, the incidence and impact will not be on same person in the indirect taxes. Now what is proportional tax? Proportional taxation means if your income is low, you pay low tax. As your income rises, your rate of tax you have to pay increases. Best example is income tax. For within 5 lakh you have a branch of 5%. Okay, we are discussing of progressive taxation. We are discussing all this on progressive taxation. Income tax is a best example. Like salary increases from 0% to 30%, the tax rate increases with increase in salary. If you are salaried about 12 lakh, means you are having 30% income tax bracket you will come, otherwise you will be in 5%, 0%. Now proportional taxation means tax rate remains like 10% of whatever it is, irrespective of income and other factors. Regressive means increasing income, tax rate will be somewhere decreasing. This kind of taxation we call it as regressive taxation. Go ahead. Cess and surcharge, what is the difference? Both of these are tax on tax. The major difference is, yes, surcharge will not have any defined objective. Cess will have defined objective. Like health cess means that amount will be spent exactly for this. GST compensation cess means GST compensation cess will be spent exactly for this purpose. So exact clear objective will be there for cess. There will be, it is a tax on tax, compensation cess. This fund will go to CFI, Consolidated Fund of India. From there it will go to public account. From there it will be used for XYZ defined purposes. Here the fund will go to Consolidated from Fund of India, not shared, may not be shared with states. But how it is used, that objective is the prerogative of the government. It may not be clearly defined as case of the cess. Cess may be shared, may not be shared, like depending on purpose of XYZ it is. Now what is equalization levy or Google tax? पहले this Google में AdSense, what AdSense does? If you are using Google services like YouTube, they will show the ads. Now you see in the ad, you may be seeing the ad of XYZ company that is based in India. Suppose you see ad of Flipkart. Suppose this company is an Indian company, you see this ad on YouTube services. Now YouTube is, पहले YouTube, what YouTube was saying? We don't have any physical presence in India, so we are not supposed to pay any taxes in India. And YouTube will not pay any taxes in India, YouTube will be paying taxes in its parent country or any other country. Now what is problem with this? The base business is generated from India. Whatever the business that happened in this is generated from India. If any economy or business is being generated from India, then XYZ is supposed to pay taxes in India. So with this principle, India came up with Equalization Levy. How much was it? 6% it was. It is not a part of income tax and corporation tax. This was also a PYQs, 2018 I guess. It was a part of corporation income tax, it was given. DTA, what is DTA? Double Taxation Avoidance Agreement. It is not applicable in this case. Budget 2016 it was released or came into being. 6% equalization levy and foreign advertisement companies like Google AdSense, Facebook, digital ads, etc. Now in 2020 budget, we expanded this equalization levy concept into e-commerce industry also. 2% equalization levy on foreign companies engaged in equalization e-commerce industry. Now India is not the only country doing this taxation. Other countries are also a part of it. Like France came up with a GAFA tax. GAFA is basically like Google, Apple, Facebook, Amazon. For this MNCs, bigger MNCs, digital MNCs, they have put this GAFA tax by France. Go ahead. What is the result development? After India and other countries started putting digital taxes, mostly the advanced countries, there is the G7 countries, they came together and they came up with a proposal like there should be a sovereign ban. Sovereign ban means countries should not club and put the digital services tax. So India say if India cooperate with this, India will have to take out this India's equalization levy and all. And what was India's stance? India is clubbed with a similar arranged countries, similar thinking countries like Group of 24. Group of 24 actively promoting that equalization levy should be a part of the XYZ regime. Now, Group of 24, it was established in 1971. It is a part of subgroup within Group of 77. No, it is established by Group of 77, not a subgroup. The rest of India is a member. Secretariat, it is based in Washington, DC. Go ahead. Why this organization is in use? Because of this equalization levy concept. Digital taxation. What is presumptive taxation? Like taxation itself is a complex process. You have to file it. You have sometimes TDS will be cut out of your XYZ revenues. Then you have to file it. Then you will get the rebate and all this. This is a very complex process. So people may not have this awareness or time or resources to do all this. So for those kind of people, we have presumptive taxation. Like for businesses having less than 2 crore turnover, they can go with a 8% of gross turnover receipts, 6% of digital receipts. So that here they don't need to do any other calculation. They don't need to get the calculation of income credit, wo credit, ye credit, ye nahi karna. Similarly, it is applicable for professionals have services having salary of less than 50 lakh or for transporters who own less than 10 vehicles. Depending on number of vehicles and all, the taxes will be fixed. Go ahead. What is Tobin tax or Robin Hood tax? It was proposed in 1978 by James Tobin. What is specialty of this tax? He was a Keynesian economist. What is Keynesian economist? Keynesian economist general idea is he has ideas, his ideas are against the free market principles. So his ideas is regarding international currency. He told that like freely converting currency should not be allowed. Like you need to convert rupee into dollar, free conversion today is there. There should be a small charge for this. If rupee to dollar you are converting, there should be a special charge for this. This tax will be called as Tobin tax. Why this is importance of this? It will check flow of what money, like Vulnerability due to flow of hot money can be regulated or controlled due to this. Go ahead. What is Pigouvian tax? Like cigarettes, tax is very high. In alcohol, tax is very high. Why? Because it results in negative externalities in the society. So these products, we keep the taxation so high to reduce their consumption or reduce their demand in the economy. This tax is called Pigouvian tax. But how much you can put Pigouvian tax? Control things by putting Pigouvian tax. Is it a sustainable solution? Now what is windfall tax? We done in the test, right? What exactly it is? If any XYZ industry or company is making a catastrophic profit, due to some XYZ incident, it is making very huge profit, government will put a one-time tax on this. One-time tax rate on this XYZ profit, that XYZ profit is called windfall tax. Now it can be due to variety of factors like individual winning lottery, supply demand problem, change in prices, decision by management, all this can be lead to windfall tax. Now why this windfall tax is now in our context? Yeah, like pehle this Russia-Ukraine crisis happened. What happened with Russia-Ukraine crisis? Whole this gas and crude oil market was disrupted because Russia is one of the greatest supplier of crude oil as well as natural gas. So all this industry was, supply chain was disrupted. Now what was the implication of this? Crude prices shot up. It was extremely high. Now even crude prices shot up. During this phase, if you look in India, there is no much increase in the fuel prices. We are still in that पहले कैसे था किधर था वही range पे है क्यों? Because even when crude price shot up, India is getting discounted crude. India is getting discounted crude from Russia mostly. Now when India is getting discounted crude, now crude prices are very high in the international market. What private companies are doing? What they are doing is they are like refining this crude in India and they are exporting it. Now it is on this exports government put this windfall tax. Go ahead. What is GST Council? Why is it in news? What is GST Council? It decides the matters related to GST, which XYZ to put in GST, which bracket it should be put. All these decisions will be taken by GST Council. It is a constitutional body or statutory body? It is a constitutional body. 279. Okay. Now, what is the voting strength? 1/3 of the vote is with the center. 2/3 is distributed among all the states. If any decision has to be made, 75% of the vote should be needed. And Union Finance Minister is the chairman of this. One other minister will be from center. State Finance Minister will be other members of the council. Now, why this is in news now? Because there has been a very disruptive Supreme Court judgment. What it says, GST Council recommendations are not binding. Not binding means what? GST Council will fix a rate. State government can go there and fix another rate. In how is taxation divided in India? Depending on the 7th schedule. Roughly based on 7th schedule. That means union has XYZ powers, state has XYZ powers. Still this is applicable. Now how GST decisions are being implemented? GST decides something and union will go and implement it, state will go and implement it independently. This is how GST was functioning. Now if Supreme Court came up with a judgment that GST Council recommendations are not binding, that means it's a very serious problem. Like if states start not implementing the XYZ decisions, then the whole council, whole mechanism can fall down. Now how center is like confronting this or center is giving explanation for this? Center said that except one decision, every decision in GST Council so far has been based on consensus. This is a federal body that mostly work based on consensus. Now, if XYZ body is working on consensus, means everyone will go and implement the XYZ decisions. Go ahead. What is inverted duty structure? Problem on textile industry. Exactly. In GST, how it works? There is input tax credit. What does that mean? If you buy 100 rupees, you added value and sell it for 200 rupees. Now you have to pay tax for only this 100 rupee value addition. आपका टैक्स कितना होना है? वो 100 रुपये में होना चाहिए. And this 100 rupee will be some other people's product. This some other people will also have paid some taxes on this. So that tax is included in this. This tax you are paying here. So this tax will be rebated to you. Now this is input tax mechanism. This will work fluently if here tax is low and here is high. Now what will happen? Here tax rate is low and then here tax rate is high and the end product tax rate is low. What will happen? Suppose inputs are taxed at 18% and the final product is taxed at 12%. So you don't have something to take from here and give it to the other people. So if you this smooth mechanism of input tax credit has to work, then government has to infuse the 6%. Now from where government infuse, they will give GST credit. And GST credit means something you can use this for any other GST payments, IGST payments. Some conditions will be there for those payments. You can use it. This GST credit will be given to the XYZ party. So basically, when input side taxation is much higher than the final product, that case we call it as inverted duty structure problem in whichever industry it is. Go ahead. That is, what is difference between zero rated and exempted GST products? We told about this in tech in okay? Yes. We have talked about input tax credit. What it is? Whichever products में previously कुछ tax दिया है वो आपको वापस मिलेगा. Now input tax credit, if it is an exempted products, you will not get it. If it is a zero rated product, tax will be zero itself, but you can apply for this input tax credit and you will get this GST credits. This you can use it XYZ. Exempted means there is no GST coming into picture, you will not get any of these facilities. Zero rated exports, it is mainly if supplies are made in SEZ or there we will call it as zero rated exports. Nil rated means supplies that have 0%. Take pick. Exempted are not coming under the framework of GST. Go ahead. Zero rated exports means exactly what it is. There is no further tax applicable on it. There is no further GST or sales tax applicable on it. It will be basically produce export products or it will be SEZ produced products. किसका है? पिक करो. बाहर से. ओके ठीक है रहना. What is a reverse charge mechanism? Usually we have told that who pays the GST? The seller. But there are some industry where the consumer itself is paying the GST, not the seller. That kind of XYZ, that kind of mechanism we call it as reverse charge mechanism. Finance Commission, what are major things to know? It's a constitutional body. Article 280, what is the functions of the body? Devolution of taxes. And horizontal or vertical? Both is done by the Finance Commission. And how much is the vertical devolution now? 41% as per 15th Finance Commission. Before it was 42%. Then this Jammu and Kashmir reorganization happened. So some union territories are increased. So devolution has been correspondingly reduced. 41% of the devolution fund will be given to XYZ stage, all the states. Now horizontal devolution means each state, how much should each state get? Now what are the different criteria used? The highest weightage is for income distance. It's having 45%. Population 15%, area 15%, demographic change is there. Forest cover 10% and tax effort 2.5%. Different states को कितना मिलना चाहिए? Like Kerala how should get, UP how should get? That will be decided based on formula of all of this. Out of this 42%, each state how much should we get? That is depending on these factors. No, 100 rupees devolve करना है. 58 rupees center will keep. 42 rupees you have to distribute with all states. Now all states में each state कितना मिलेगा out of this 42? That will be based on these factors. Demographic change, forest cover and tax effort. Go ahead. Now we are 16th Finance Commission. मेंस में आया था ना ये. हाँ अदर वाज quite tough question. पुराना पूछा था बहुत. अभी recently 16 हो रहे. बहुत controversies है इसमें but question was not regarding those controversies. Controversies क्या है? Because कुछ भी finance commission है, terms of reference are all set by center only. State has no role in this. What is other controversy? Which data should use? So far we have been using 1971 census data. It has been frozen till 2026. Now if you use the recent data, then those states which have done this population control measures stringently, they will get lesser devolution of taxes. So these were all pending issues going on. This is same with the constitutional division also. Like constitutional assemblies, how much seats should be there in parliament, this same issue is pending there also. Yes. Go ahead. Global minimum tax. What is global minimum tax? Why this is in news? What is BEPS? Profit shifting, both base erosion and profit shifting. What does that mean? Suppose a company has this is working in India, and the same company has offices in some other country. See, this is subsidiary of the same country. Now, there is transaction happening. Some goods are here coming. पैसा इधर जा रहा है. 10 rupees का goods है. Now, if the company can show these goods is 100 rupees. So this whatever profit 90 it was technically earning, it becomes an expenditure. So this 90 will go to here. Suppose here is a 0% taxation country like Mauritius or some tax haven country. So the 90 was actually a profit generated in India, but the company do some jugaad and showed it as expenditure. And this expenditure किधर जा रहा है? Subsidiary of the company. And here they showed it as whatever it is profit, but the profit taxation is very low in the country, 0% or very low taxation. So technically the company has to produce no tax. They are shifting their profit from India to some other low tax countries. To stop this, we have came up with the idea of global minimum taxation. Global minimum taxation means every country should at least keep a 15% minimum tax. The 0% taxation should not be part of it. At least a 15% minimum tax should be there. Which countries are promoting this? G7 country, mainly advanced countries want to go ahead with this. It has two pillars. Second pillar is regarding the 15%. First pillar is regarding the fair distribution of profits and all. What is Laffer curve? Tax revenue and tax rate. If you increase the tax rate, revenue will increase till a point. Higher tax means higher revenue for the government. But after a point, you increase the tax rate. Yes, people will either don't give the taxation or people even don't work. So GDP is not happening, growing, then taxation will eventually fall. What is tax buoyancy? Not GDP. Change in GDP. If a GDP increases by 1%, how much will the tax collection increases? If buoyancy is 1, that means tax collection will also increases by 1%. Then we call it as buoyancy, tax buoyancy is 1. If 1% increase in GDP lead to 1.2% in tax collection, then tax buoyancy is greater than 1 and vice versa. Understood? Difference is what we are focusing on here in tax buoyancy. What is tax elasticity? If income slab is increased from 5 to raised, how much tax will increase or net tax revenues will increase? Tax rate or tax slab increase here, what will be the corresponding increase in the net tax revenue? That is tax elasticity. Why tax elasticity is important? ठीक है, we'll discuss later. Types of deficits. Let's learn types of deficits. Revenue deficit. What is revenue deficit? We have seen that picture, like capital receipts is the revenue receipts is revenue expenditure minus revenue receipts. What all comes in this revenue expenditure? Salaries, pensions, all that expenses of government that is not leading to any capital asset formation, all will go into revenue expenditure. Revenue receipts will be taxes, indirect taxes, direct taxes, non-tax fines, all this will come here. Difference between revenue expenditure, revenue receipts is revenue deficit. Effective revenue deficit means even in this revenue expenditure, there will be some component where center pass the money to states. Now center give XYZ money to the state, state will spend it some in revenue, some in capital. Getting? So some amount of even center's revenue expenditure will be used by state for capital expenditure. So if you subtract the grants to various bodies which are spent for creation of capital assets, you subtract this, you will get effective revenue deficit. Got the point? Third is budget deficit. Budget deficit is say like planned deficit. When budget is published or put in the parliament, how much is the deficit at there? That is budget expenditure minus budget receipts. Now what is fiscal deficit? But total expenditure minus total revenue minus borrowings, that is fiscal deficit. Budget deficit minus borrowing will be the XYZ formula for fiscal deficit. Now what is primary deficit? Interest paid on previous loans. Like how much is the current year government taking as borrowing? That exact figure you get it from primary deficit. That is fiscal deficit minus all the interest rate that is paid on previous loans. Clear? That indicator you get from primary deficit. Fiscal deficit means, suppose 100 is your revenue, your government is spending 110, fiscal deficit is 10 rupee, you have to borrow it. Now out of the 10 rupee you are borrowed, 6 rupee you are giving to loans you take few years back. That is only 4 rupee you took as new loan, new component. Rest component you are taking just to service the previous loan. So if you subtract that, you will get primary deficit. Fiscal deficit क्या करना है? Fiscal deficit. It's simply like expenditure minus revenue, and here revenue में ये add नहीं करना borrowings. Suppose government is there. Consider government as a person. Government is earning 100 rupees from all the revenues, tax revenue, capital revenue, सब मिला के 100 rupees government is earning. Now government is planned an expenditure of making an expenditure of 110 rupees. This difference is fiscal deficit. Now ये कैसे meet करेगा? Either government can borrow from the market, or government can print the money also. Print the money we are not doing it right now, ways and means, all this we discussed before. So this difference is called expenditure minus revenue. Simple difference is borrowing minus कर देना means इधर क्या है? Revenues of the government. Revenues means whatever money government is getting. Borrowing is also a component of revenue. If you put that also means then revenue will be equal to expenditure. So revenues minus borrowing, expenditure minus revenue minus borrowing component will be fiscal deficit. Go ahead. What is the recent trends in deficit? You can see here. Currently we are at the range of 5.9% for this year. That is the fiscal deficit. Revenue deficit is in 2.9%. Primary fiscal deficit is 2.3%, and effective revenue deficit is 1.7%. Mostly numbers are not too much important, but at least a trend, a question can be framed on this, and basic concepts which we discussed in the last class, that should be, you must be very clear with that. All are following similar pattern. This is like due to pandemic, this is in these ranges. Otherwise, we'll see what is the FRBM targets in the next slide. Go ahead. What is extra budgetary borrowing means?
Those that comes from the budget, but they are not reflected in the fiscal deficit.
Financial liabilities that are raised by public sector undertakings. Government is not raising the money, but some other organization is raising the money. But repayment of the entire principal and interest is done by the government through budgetary expenditures. This budgetary expenditure will be after some years. That time government will give money to the organization. So when the exact point where this borrowing is done by the organization, that XYZ will not be reflected in the borrowings of the government. So fiscal deficit, revenue deficit, इधर ये reflect नहीं होगा. But total debt of the government में ये add होगा ही होगा. If you compile the total debt of the government, the extra budget of borrowings or off budget borrowings all will be a part of it. Only difference is that year fiscal deficit या revenue deficit में ये add नहीं होगा. It will not be part of official budget calculations for that XYZ year. But its का interest as well as principal will be paid from government budget expenditures itself. What is Cardinal Equivalence? When people see lower tax today, people think that आज both कम tax है. People think that a higher tax in the future will come. so that they will have to pay more to the government in the future. So if they will foresee a future expenditure and do not spend today's money. That kind of mental state is Ricardian equivalence. And what will happen is, suppose government, some XYZ happened, like pandemic happened, government will cut taxes. Why government cut taxes? So that people have more disposable income. If people have more disposable income, they may spend more. But if people get into this Ricardian equivalence mindset, what will happen? Even though government cut taxes, government people will think that ये just temporary solution है. Government will increase the taxes in the next moment. So people will anyway have to incur a expenditure in the later stage. ये बोल के ये डिस्पोजेबल इनकम होगा वो सेव करके रखेगा, एक्सपेंडिचर नहीं करेगा, स्पेंड नहीं करेगा. स्पेंड नहीं किया तो consumption will not pick up. So the whole objective of the government will become ineffective. That is Ricardian equivalence. Crowding out of private investment. What does that mean? In an economy, government as well as private, both these are raising money from same market. If government raise too much money, then there will not be any money left for the private, and this will impact which component? This will impact investment, private investment component of the GDP, and it will can result in lower GDP numbers. This is called crowding out effect. There is relation you can see here. If public sector is taking all the money, the loans in the market will become costlier. If costlier loan is there, then private sector will be reluctant to take too much loan. Clear? Go ahead. What is counter-cyclical policy?
Government expenditure to revive the economy.
Most of the economy phases are expected to go through period of boom and period of recession. Now, what government usually do is, when economy is going through a period of boom, government can collect more money, get more taxes. The government will spend more because they are getting more money. They will expect this will continue. But then happen when recession phase come, government really need to spend here, but government is not getting, tax revenues will dry out. So here government will go to a very bad situation where they cannot spend any money. So to address this situation, we create a counter-cyclical policy. That means when government is going through boom phase, you don't spend all the money, keep some buffer. This buffer you spend in the next recession cycle, so that the net impact of whatever the recession that is happening in the economy will not be that severe. Yes. Don't do this extra spending and keep some buffer, so that when the next recession phase comes, spend that so that the economy can be supported. Like if extra spending is done by the government, then there can be like fall in the GDP will not be that much. Like again we are using the CIG X minus M. You manipulate X so that your GDP, whatever impact it is having, will not be that much too much. At pro phase you spend little, and at recession phase government spend increase karo to pick up the GDP numbers. Go ahead. What is FRBM Act? Fiscal Responsibility Management Act, basically. What is the purpose of this? Fiscal discipline in spending of governments. Which government it is applicable? Center as well as state. What is the different targets as of now? This was like before pandemic. By 2023, fiscal deficit is to be attained at 2.5%. Revenue deficit at 0. What rate we are going right now? 5.9. 5.9%. That was pandemic created all the disruption. And what was the major recommendations by this NK Singh committee? We should focus more on debt to GDP ratio. There should be a 60% general government debt to GDP ratio. Out of this, 40% is for the center and 20% is for states. Now there is an exception clause. When this XYZ situation happens, like there is a national security issues, war is there, calamity, anything of this sort happen, government can breach the XYZ target set by 0.5%. This is called escape clause. Now FRBM says that government along with the budget should place all these documents also, 4 basic documents. There has been a PYQ on this also in engineering service also. So at least have a familiarity that you will identify which document is not in the list. Macroeconomic framework statement, medium term fiscal policy statement, fiscal policy strategy statement, medium term expenditure framework. Go ahead. What are different types of budgeting? Traditional line budgeting means what? I will allocate for a scheme, say 1000 crore, then I completely close it. I will not track what happened to this 1000 crore, whether it created any improvement in the system or whether it created any result. That is not part of my bothering. I will only allot the XYZ money to XYZ scheme depending on demand of different ministries or depending on other factors. That is traditional line item budgeting. Performance budgeting means I will allot 1000 crore to buy computers, but I should get 30% clearance, faster clearances in whatever the government processes are happening. So you are spending the money and you are keeping a demand of there should be an outcome for the whatever the spending is given for the scheme. That is performance based budgeting. Zero based budgeting means like usually क्या होता है, every year suppose 100 crore is allotted for a project for 1 year, next year maybe 110 crore will be allotted to it. Gradual improvement will be done. In zero based budgeting means 1 year 100 crore allot kiya, deal close. Next year if you want to again 100 crore, you have to put another request. You have to go through the whole processes again. Every spending is for just 1 year. That kind of budgeting is zero based budgeting. Now sunset budgeting means certain schemes launch with a cut-off date. Cut-off date means 4 years. 4 years cut-off date is for 4 years the spending will be done. After that only the zero based starting restart will happen. At least till the cut-off years, there will be continuous spending for the XYZ scheme. That's all from fiscal policy and budgeting. Thank you so much.